President Trump announcing his new pick to lead the central bank. Trump says he's nominating former Federal Reserve Board Governor Kevin Warsh to succeed current chair Jerome Powell. Trump has repeatedly criticized Powell for his cautious approach to lowering interest rates. If confirmed by the Senate, Warsh would replace Powell when his term expires in May. And that brings us to a segment we like to call In This Economy. Freddie Mac says the average 30-year fixed-rate mortgage is now sitting at 6.1%, which is up a tick from last week, but it's still near its lowest level in some 3 years. The question we have now is, how could the next Fed chair impact the housing market? Joining me now is Logan Mohtashami, for the lead analyst for the HousingWire. Logan, you've said Trump's pick of Kevin Warsh to be the next Fed chair may seem surprising on the surface, but in your words, this is Kevin Warsh 2.0. What do you mean by that?
I think this Kevin Warsh will be much better for the housing market, much better for the economy, as he is going to be as dovish as he possibly can to push President Trump's agenda forward.
And you say the housing market is actually a little more balanced right now between buyers and sellers. So how does Warsh keep it that way, or does he even want to change that balance?
I believe Kevin Warsh is, unlike Chairman Powell, has talked about needing to get the housing market going again. And as long as mortgage rates just stay near 6%, what we've seen in the last few years is that housing demand can grow, inventory's up, price growth is cooling down, wages are rising. It's a much more balanced housing market. And Kevin Warsh wants to continue that, where Chairman Powell is a little bit hesitant. So for this spring in 2026, it's the first year that we're going to see probably growth in existing home sales, and we don't have to worry about prices escalating out of control. It's a much healthier, balanced housing market now than it was a few years ago.
Yeah, you touched on it a little bit there, that inventory is up after being so limited for what seems like just a really long time there. There are a lot of potential buyers, those sitting on the sidelines right now. Which markets are you seeing, or which markets, I should say, are you seeing where home prices are actually on the decline?
In the Sunbelt states, of course, inventory is up a little bit more there than other parts of the country. Of course, home prices escalated out of control a little bit more there. But in general terms, when mortgage rates get towards 6% and just stay there in the past few years, whenever we get here, we just shoot right back up to 7%. That kills kind of all demand growth. Now, generally, the entire economy, the general housing market performs better now. So I believe Kevin Warsh and President Trump, everyone wants to keep rates just a little bit lower without less volatility. It'll be benefit for the United States of America and the housing market in 2026.
It's really nearly impossible to perfectly time the market. So where do you see prices going in the second half of 2026?
I just think it's going to be roughly a flat year. We still have affordability issues. Mortgage rates aren't at 3, 4, or 5%. They're just getting towards 6%. So no real price growth in any big terms, no real big price declines, but demand has picked up in the second half of 2025. That has continued with how we track housing data at HousingWire, and it's looking pretty good for the spring. For the first time, stability in rates, inventory's up, price growth is cooled down, buyers and sellers. We have a housing market that's much balanced now.
All right, Logan Mohtashami, thank you so much.